Good morning and welcome to October 9th, 2023. This is the Breakfast Club and I'm Darren Hancock, your host. Thanks for popping in today. We are looking at the markets on a holiday here in Canada. It's Thanksgiving. So no trading for us today. We're just going to be looking at the markets. If there's a stellar entry, we may look for that to take. If not, I think we'll just kind of get a read on where the market's going. This whole Israel war that's going on there now is going to create a ripple through the market. So we're just going to see where it kind of pans out today. This could seriously affect gold, and it could be everything. So especially natural gas and oil and stuff. So let's start from GBP and work our way down. So this is a British pound on the daily. Still looking for the fair value gap on the daily. I'm not bullish on this yet. Though we have run above this fair value gap here. Today we've opened and actually closed. Sorry, not closed. We've opened and we've traded back to the fair value gap here on the daily. So let me move this over a bit more and go back here, make sure I'm on the right spot. There we go. So as you can see, that's we've come back, tagged it. Now, are we going to start moving away? We're literally squeezed between three weekly new week opening gaps. And when you have 3 week opening gaps all combined like this, you tend to get a bit of a consolidation between the two, or the between two, especially when they're close. But when they're overlapping each other like this is a first for me, because I've only been doing new week opening gaps since Michael introduced them. And I've never seen one, though. You have triple overlaps like this, so we'll see if Michael says that they tend to overlap or get close. You tend to get these consolidations occurring. So we'll see what happens in the next few days with this. Do we play off of these? Which one do you play off of? We're in the middle of this little consolidation that's starting now. We're in the premium portion of the last 3 days. Run up. We have relative equal lows below us over the last 2 days on Friday and Thursday's opening. And we're kind of just sitting here right now, right on the opening of 1 week and the close of another week. So we'll see what happens. Let me just quickly get back into the page here, making sure that I respect anybody that comes into our little show in the morning and they get an opportunity to speak and share their thoughts. And let me just see where we're at here. Okay. I'll put on the Breakfast Club as well. Anybody pops into that, they're welcome to pop in. All right, so we're all set there. We are 1 minute away from the opening. Let's quickly go over to Euro. The Euro is pretty much in the same consolidation. There's a small little pool above. I ran into that once before. Let me make this a little bigger. Yeah, I ran up and into that little fair value gap there. And that should be blue, really, because it's on the daily. Yeah, we're between three opens as well. Let me get down to the hour, make sure I've got the new week opening gap measured. We start wow, there, and that one and that one. We actually have an overlap here. We have that one from there down to the opening right here. And this one here is going to split them. I need a fib tool here on this one. Okay, so we're going to need a little fib tool to pull on this, and we're going to come pretty close there. There. Wow, that's quite the little choppy. Big gap opened up there too for the new week opening gap. Hourly, we see a return to this order block above this fair value gap here. Does this hold price and continue on the downside? This fair value gap here is holding price right off the bottom there. The bodies are respecting that candle perfectly. So we're between this fair value gap here and this gap here. In terms of, does this one provide support? We can on top of it and continue climbing higher. Or does this one drop below this, come back up, find support, and continue pushing down into the fair value gap on the daily? The CAD. CAD looks like it's just run all these equal lows up out of here. Even though I'm in Canada here, I'm not a big fan of CAD. Jumps around. I have a friend of mine who can trade. He trades CAD and oil together. It's our major commodity here in soft pulp and paper and that kind of stuff. It's our big thing, soft woods. But oil is our major money maker. We've got lots and lots of oil up here, but we're landlocked with it. Right? We're not moving it to the coast fast enough. So he works this one and oil all together. So as oil moves up and down, he'll jump around in there as well, and he'll get inside CAD, and he seems to be able to work that quite well. I don't trust that one too well. This is the natural gas play. I've been calling this for months now. So we've been running this up. We broke through 1 and 2, and looks like we're coming back to find some support. If we find support here and continue pushing up, we're looking for the next. Well, first of all, we got to get past this break. It's the parent breaker of that whole run up. If we get through here and we get up into this fair value gap on the weekly, and then again, then you step back onto it and continue driving higher. As far as I'd like to see this now, this week end inside this fair value gap here. I'd like to see that stop, pop back up, wick into it, maybe wick down, tag it, and leave it open as a breakaway gap for a nice continuation on the upside. How's that? So if I was looking at this on the 1 minute candle, this would be a beautiful weekly candle. It would be a small weekly candle end right there. Unless it wants to do something crazy like really shoot up hard this week, stop, then create a fair value gap that we trade back into this area here somewhere, and then push further to the upside. So that's what I'm looking for here, but I still want this to stay open. Worst case scenario is it comes all the way back down, hits these equal highs again, and then slowly continues a grind back up. So 2 scenarios. I favor the one on the upside for more. We're going into winter months now. So I would expect the price to continue on the upside. Daily. Yeah, we've got a little imbalance back here. Let me put a little blue box there. That'll represent our price imbalance. And we'll see how that reacts off of there this week. Aussie dollar. We're in the middle of that, coming back into the 50% of this range that's created here. We've come up and through this fair value gap. Sorry, we've come down and through this fair value gap. Let me rephrase that. You can tell it's early morning. I just woke up maybe 10 minutes ago. Sorry, we have fair value gap from here to here. It's a SIBI. We ran through the SIBI. We came back all the way through it, ran all the way back down into threshold, just through the threshold of that candle. The wicks did the damage. Bodyguard stayed above. We came back, and then we worked into the full fair value gap one more time, and now we've had a reaction off of that. So we want to see it kind of cut through this price imbalance that we've been kind of noting here for a couple of weeks. If it gets on top of that, gets some more support, and continues to push upwards, we look for a fill of this fair value gap SIBI on the daily. And then I'm still not bullish on it yet, but we're looking for a fill of this fair value gap, and we'll see what happens from that point on. New Zealand dollar, obviously the stronger of the two pairs. SIBI, break through, come back. This one actually respects that fair value gap nicely and pulls away, opens, and continues to the upside. So we're looking for further higher prices. We've already hit the rejection block, so we're looking for this candle here. Let's look at the wicks here. So 50% of that wick, we got 25%, came up, hit 25%. Remember I was telling you about 25% of the wick is, if it just hits 25% and pulls away, it's a sign of weakness, and that's a good indication or a good example of that right there. And then we have further upside to 50% here. So if we can hit the midpoint of this wick, that would be the next objective. Clear these two equal highs here and run for 50%. That's what I'm looking at for New Zealand dollar. The S&P 500 on the daily. There. The S&P, we have a return to, we shot up, opened down, and then just came back to the tops of these order blocks here, and then looks like we're just climbing back up, potentially for equal highs. If we run the highs out, back off that weekly fair value gap, you see the support it gave last Friday, ran up, hit the bottom of it, reacted off of it. Now we're stuck between, really, we're in the middle of the fair value gap on the monthly, and we're between the two weekly. This one is now an inversion fair value gap. This one here now becomes an inversion fair value gap because we've come back. We filled it, came back up, broke through it, come back down. Now if we find support off of that, we're going to kind of bang around in here for a bit. Given that this is a holiday today, we may see just banging around side to side. I can't really call either direction on this right now for the S&P, so if you're going to scalp this, do it with very little leverage, especially in this volatile kind of situation. I'd rather just sit on the sidelines and watch, see where it goes. Oil. Now, oil was kind of interesting. Expecting more downside on oil. Then the war started. And we have a daily fair value gap here inside weekly fair value gap. So we opened up higher. Wars always seem to get gas prices starting to move up. So make sure your cars are filled. You got food, as Michael says. So upside. We want to see the steps here, right? I want to see the steps on top of this weekly, daily. If we are truly changing direction and we're starting to push for higher prices now, I want to see this really get some legs here now and start to push through all of a sudden and leave this all behind. 50%, still this order block here. If we lose this order block's candle, its wick, and we see this nice little stepping pattern occurring here, then we have a change in oil. I'm not quite sure until we've hit this 50-62% range here. Got to get above that for me to get really bullish for oil again. Gold. Gold opened up on the daily. We were having a nice little run down. We had lots of draw on liquidity here. We got weekly and monthly draws on liquidity. So there's monthly, another monthly fair value gap, and you also have a weekly further down. So there's lots of draws on gold. But again, during wars, precious metals start to run. So we have higher prices. We've gapped up. We were looking at 1835 a week or so ago, and that's clearly decided to jump through that. We're right in the middle of this fair value gap here on the daily, still inside the daily fair value gap here. So how it reacts off of here, we've come back up and we've just hit the edge of this little daily fair value gap here. We're in between this one and this one here. So where gold goes from here, I can't tell you yet. Again, you got to get down to the lower time frames to see what's going on in there. US Tech, yeah, we had a little pump up, come back down to the order block. Now we're looking for a continuation on the upside, fill in the rest of this fair value gap. Either drive up. Here's an opposite scenario for you. It's been quite choppy here on the daily side of things. Kind of hard to call this just because we are with this big bold candle. That could be just a simple take people on the belief that we're running up, then turn around and slam it down and take out all of this down in here. So I really am not sure honestly where this is going. We're still in the monthly here, so I can't give you a solid read on NASDAQ right now either. Sorry about that, but no, I can't. You'd have to get down to the lower time frames to see if there's a snipe that's available. So let's go down to S&P 500 if we have the anticipation of just trying to think about which one looks the most delicious opportunity today. And we don't have to be making a trade today, but it'd be nice to find something that's a quick little snipe. We're off back and forth in here. Daily, if this follows along with the tech's done a nice little steady push. It's starting to run up. This is running to the edge of the monthly. If it runs to near the edge of the monthly, it takes out Friday's high and last week's high. we're into that weekly again. So I'm going to be biased long, really short term on S&P 500. What's down here in the hourly range? Yeah, it looks like we're coming up for a fill of this here. Yeah, you have a fair value gap here. And that's kind of like one of those institutional order flow entry deals. Range, fair value gap, come back in, fill, right off of the order block. And that one is right in there on the threshold of this order block. Those are your 3 PD arrays, 1, 2, 3. It holds price, and we're pushing for higher prices. And look for a close of this gap. That's actually a gap in price. There's no buy side or sell side, so that is a true liquidity void when there's no price at all. So if that runs up into here, where does it go next? So yeah, it has to be the objective first, and then you got the highs, the equal highs, this old high back here. Wow, I sure duplicated a bunch of them real quick. There we go. Nothing. I got nothing, man. If it fills there, then where do we run next? 10 o'clock? Do we take out the highs at 10 o'clock? Does this create an opportunity for us to get in here with the break above here for a quick little return in on a fair value gap for higher prices? You get 10 handles or something like that, 20 handles. Maybe it's just an observation day, see where this war flushes out in the market. Let's have a look at the American dollar here. Oh, good morning. Oh, I didn't see you there. Good morning. You had a great weekend. Hope you had a great weekend. And you too, my friend. Hope the Bulls can feast this week. Yeah, so do I. You see this whole stuff that's going on in Israel right now? It's been looking crazy. Looking like 43, 48 is the next target. And that was on this one, you mean? 43, 48. 43, 48. Like you're looking way up here. Taking out these guys. Yeah, short term here. And then I don't know. I don't know if that's just going to reverse off there, come back down, or start pushing for higher prices. This is the first short-term objective. But we're going to wait and see what happens as it starts to run out today. Which would fill the fair value gap at Friday's 1545 candle. Friday's 1545 candle. Friday's 1545. This one? Is that the one you're talking about? Sorry, I was jumping around between different currencies there. Friday's 1545 candle. which would fill up in here, you mean? Yeah. Yeah, usually you have to come back and fill in this gap, right? So the price is actually delivered throughout the whole gap. So if you looked at this, right there, yeah, we could usually get a run up for a fill of this. When I saw this the other day, I thought, oh, this would be lovely to get in on this short as a break-in structure, fair value gap. We have a swing high, so a low, a swing high, and then a breakdown below these old lows. This becomes the breaker. Come back up inside that, hit that, and then go short. But now that the war's on, I'm not sure how crazy the market can be, so we'll see what 10 o'clock is like. But if we get a run up in here, a paper trade from here, putting a stop loss above that, then looking for a drive down into lower prices, taking out all this stuff here. All liquidity here hasn't been fully filled. This fair value gap hasn't been filled. These ones haven't been filled. This inversion fair value gap hasn't even been re-tagged again. So that's a reasonable objective right there for a short if we get that at 10 o'clock. So I want to see how that reacts. If that reacts off of there and we definitely get a pullback and we get another little fair value gap that forms perhaps from here, if we come back up into it, tag it one more time and get short, that might be a definite opportunity to get in. Otherwise you're going to be trying to chase the high, right? Closes the black swan gap and then targets Friday's fair value gap. Yeah, that's just a gap. That's not a black swan event yet, my friend. Black swan events just go woof. They either gap down hundreds of pips and then they drive down really fast. I wish I could try to find that one for you back in 2017. I don't even know if this goes back that far. On the British pound. $2017. Or was it 2016? Yeah, that was 1,400 points. It dropped. Now, September. I think this was the black swan event. Was this the one? That's 1,700 pips. Now, if you chopped it down more and more and more, you see that plummet that day was like absolutely like 800 pips. It just went kaboom. It just took off within minutes or seconds. It just within 2 or 3 minutes it shot down that fast. It was nuts. Anyway, not that your term is still correct in terms of it's a huge ugly gap that occurred there this weekend. Euro's coming back up to the top of the daily. Let me get these out of the way here. It's going to make a lot of noise. Delete. So do we get a reaction off this and start coming back into the range again? Or we're starting to push for a fill of the gap, that liquidity void that's occurring here. We're going to come back and fill that. Yeah. Kind of hard to call it. It's hard to call this week. Let's go back to the hourly. See where that goes. I thought, because it was 150, that it's called 150? Is that the rule of 150? You may be right, man. I've never heard that rule before. If you've heard Michael say 150, I tip my hat to you. I apologize. I didn't know that was the definition of it. I just saw it, I thought it was just something that took off so fast and plummeted hundreds and hundreds of pips. And nobody could get in or out of it. It gaps down so fast. So I apologize if that's the actual definition is 150 pips or more. Yeah, let's just wait and see what happens here at 10 o'clock. And then we'll go down to see what happens on the minute-wise. Just trying to think about where all my bots are. Well, I've only got one on. Okay. CAD. We're getting pounded against the American dollar. Holy smokes. Look for a fill in Australian dollar. We might actually have something on Aussie dollar. It's through the gap already. It was created on Saturday or Sunday. There's the Sunday's opening. We gapped down. We come back up. We hit it, filled it, and retraced away. That's what I was talking about here on this 500. Hasn't done it yet. Similar type of thing to the Australian dollar. See how it comes up, fills, and then can pull away quite easily, take out the lows. Now it's coming back up into the range again. So we have a fair value gap, daily, high, opens or closes, and then we end up going down to the bottom of the other daily fair value gap. So you're kind of right before, back and forth between the two. Even with this whole war thing opening up, look where the precision it comes down to, comes back to, comes down to, and then back. So we're literally tag, high, low, high, again. So even in that chaos, there's precision. Given it's Australian dollar, but still algorithmically, New Zealand dollar, all the way down, hit it. Now we're looking for higher prices on. These might be our little, our plays now. I want to see a fair value gap form in here. Get this to be a busy. Come back into it. That won't be for a couple of hours though. And then push up for higher prices. Now that we've broken this, I'd like to see it break above here actually. Get a body above that. So we may have something on the hourly. Break in market structure, the upside. We have a fair value gap. Another fair value gap, break to the upside, come back in, fill it. Continue driving through. That was a nice little entry. 6:30 this morning, 6:48 this morning. Yeah, that was a nice little entry right there. That's all right. So now we're looking for, do we have a continuation or breaking structured back down to the downside? So we're going to try and scalp this out. So here's your euro, hit the edge of that. Daily fair value gap. Drive through. We're at 10 o'clock now. Let's make this smaller. We ran out some highs here, little fair value gap here on the 1 minute. Are we just coming to fill that in reverse? There's more fair value gaps all the way up here. So does this have more and more upside? So do we come back, find some support here? This will be your silver bullet entry. I didn't know sorry, I keep missing your comments here. Oh, I didn't know. I just thought since it was a big move, it was considered that. Oh yeah, no, you'll know when a black swan event, they're rare. They don't happen that often, but when they do, you'll go, oh, that's a black swan. Yeah, they come out of the blue. I've only seen one in 7 years, but they are, when they come hard, fast, and ugly. Didn't know it had to be hundreds. Oh yeah, it's crazy. It takes people and slams it. Check the percentage on the bot before you activate it, unless you want 2% going. Thanks. That's a good thing to remember. Yes, thanks for reminding me that. I'm going to check my... Good thing you got me to check it. I was sitting at 0.25% per... So it would have been 1% if I only had one entry on. Or not one entry, at a cluster of 4, it would have been a maximum of 1%. So make this a little bit bigger here. Where are we going for higher prices or lower prices? Higher to fill, right? So we're looking to get back for something to support price. There's nothing else down here other than these equal lows here. It would have to be way back here. That is a little fair value gap fill right there. So that could be the silver bullet entry, a little tiny thing there, and start leaving. How did you get your, did you manage to get your live account now, or do you still have to wait another day or so? You said it was like 72 hours or something like that before they could actually verify it. Is that 72 trading hour days? And do they count vacation? Because you guys don't have a holiday on there, do you? Let me just check the... I'm just going to check the... Makes rare comment about Melania. Sorry, all this news chucking at me here. What are we looking for here? Oh, yeah, see. I run on the liquidity there. I'm going to wait. We've just hit the edge of the weekly price imbalance, or the weekly new week opening gap. We just hit the middle of it. We're reacting off of that now. Do we have a downward flow? And price. Yeah, I think it's 72 hours. Today is a holiday for us in the US, yes. have a look at Forex Factory and see what we got for news events this week. Now, do you use Forex Factory in your analysis, Kevin? Do you look for news events? I usually come over here. This might be one of those. Wait till the 12th minute. On the second, yeah, I agree. Filter. I filter out all this crap and I get rid of these guys. I sometimes keep those guys. CAD. I don't really need Swissy. Apply the filter. So this week we're looking for I looked for the big pile of or the red ones and the orange ones. That's the main focus. And I go, oh, okay. Thursday seems to be your CPI numbers. We want to wait for the CPI to come out first before you get into that market. You got to be real careful about CPI. Boy, that can beat you up pretty bad. So we're going to be watching real carefully around. Well, we won't be awake by that. Or I won't be awake by that time. That'll be 6:30 in the morning. Watch the CPI numbers come out. That can seriously throw a whipsaw into the market. So we're going to wait. By the time I get up, that'll be done. Unemployment claims. Thursday looks like a big day. So we're going to be sidelines. Well, that's going on. Let's move back to, we got nothing going on here today. Here we go. All right. So we have another fair value gap here. Another one here. We came back in, tagged it there. Start running for these lows. Silver bullet entry is right here. It's right there, it's right there, it's right there. So which one do you take? That's why I like to wait for the first 5 to 10 minutes, 15 minutes, and see what happens in that little bit of time. Do you filter out your low frequency events? Do you get rid of those low news events when you use your Forex Factory, Kevin? Man, my mouth's not working today. I'm just kind of super slow. In a brain fog. All right. Or do you just take all the news events, all the gray boxes and the yellow ones as well? Because they don't really fire a lot of liquidity into the market, those little news events. So I only read the red and orange as you, but I leave all pairings. Oh, okay. All right, so we have a break-in structure, but we don't have a... So here's a new rule I kind of came up with. I'm going to share this with you. If we have a break-in structure with a fair value gap and a breaker, you take the fair value gap. If you don't have a breaker below the fair value, or fair value gap below the breaker, you take the fair value gap. Sorry, you take the breaker. I know that sounds confusing. It sounded confusing to me. So I'm going to wait a couple of more minutes. I think, so if we have a breaker, we have a run above or below old lows, and this breaker happens inside of a fair value gap, but the fair value gap has to draw down below the break-in market structure. If it does, you take the fair value gap. So it would come down to here, create an opening, you take the fair value gap. If it doesn't, and the fair value gap happens inside the breaker, you take the breaker. So you come back up inside here. Here. This one is an example of there is no fair value gap below. We just have a break-in structure with a fair value gap above it inside that breaker. So I would wait inside here, put a stop loss up there to go short on this. It's coming up to the breaker now. It's tagging the body, the low, the body again. But I want to see it get back in here and here. And this will be a paper trade just because there's 50% right there. 62%. There's a little inversion one here. Well, watch how these little inversion gaps become important. Well, it pretty much colors in that whole one here. That becomes an inversion. So it came back into the breaker, keyed off of it, and now it's pushing through. So I didn't get what I wanted. And it just came right to the edge of that first one. We can afford to be picky. This is the 1 minute chart. We can wait for another setup. Well, you should be live this week, Kevin, at least anyway. We know for sure. So no overtime last night. You won't need overtime, man. You won't need it. We'll get you to the point where you'll be like hauling in so much you'll say, I'm calling in sick because you're working the markets. I'm making too much money. I can't afford to go to work. Wouldn't that be awesome? That'd be the great way to wake up and go, oh, I'm just killing it in the market. You do that consistently, month after month after month. You start putting a nest egg aside. You put in that FU account, some people call it, when you can build enough money in your account to say, you know what, F you, I don't need this job anymore. I don't need to take your bullshit anymore. Okay, here's another run into no overtime, which is good. I was tired. You want to get stuck for 16 hours? Yeah. That's one of those things, your head's going to be on a swivel and you got to be constantly watching what's going on. That's a high level of mental focus there all the time. So we may still get this area here. We'll see how this order block handles the next run in price. It's another fair value gap right at 11.12, so that would be the one to enter in on for a short. So we're going to pretend we're going to enter in here. We'll put our stop loss above here. So we'll put a little pretend one here. I'm basically going off of my time and oh, I didn't even turn the bot on. Well, we'll see what happens here. Okay, I would be out now. As soon as it comes back, I'm out. It broke above it, so you're out. That's the rule. Stay out of it, man. Body breaks above. So I wouldn't even entertain I would take that little piece of loss right there. Now back to the other idea we had, which was return into the rule, the new rule. When you have a breaker inside of a fair value gap, you take the breaker. The fair value gap occurs below it, take the fair value gap. So we're inside here. This would be good to stay open now. Boom. Hit it. Now we're going to continue through. This one doesn't work. We got out of that quick. Simple little rule, hey, but look at how much that would have taken our whole stop loss there. But the rule was if a body breaks through it, doesn't provide that's not going to give us the support we're looking for. So anyway, that's my little safety rule. That would be a paper loss, a tiny one at that. We've come back into the breaker. Fill this. Now we want to see the bodies respect this. You don't want to see it close above that. Because right now we're between this breaker and this breaker. Overlapping breakers. Consolidation time. Stay out. And we're looking at what now? We're looking 18 minutes after. See how that's kind of just bouncing around off of that PDA. That higher PD array fair value gap. Is it going to slowly start to erode and come back down? In order for this to go bearish again, we have to get below here, below that swing, come back up inside it, and continue down. Otherwise, we could be still bullish. I'm wearing the 1 minute, so there's really nothing to play there. Let's look at this one here. Nothing CAD. Let's get down to the 1 hour in CAD. Here's my example I was telling you. So we have a fair value gap that's below the breaker here is sitting inside that fair value gap, and the fair value gap actually exists below the swing point. Then you come back to the fair value gap. If the breaker is actually inside and this fair value gap here does not occur below the swing, then you take the breaker. If the fair value gap occurs below the swing, you take the fair value gap. That's my new observation. Michael hasn't ever mentioned that. That was just something I've been looking at. So I'm going to see if I can prove that theory out and see if it works. Here's the example. Breaker, fair value gap does not occur below that swing, so you take the breaker. And it goes. So here's an example of it working here. And here's the other side. So that's the fair value gap that occurs below the swing. You take the fair value gap. This one is fair value gap occurs inside the swing. You take the breaker. Just an observation. Tell me what you think. You can test it over time if you like. But that's a free observation that I've made that may bear fruit. It may bear fruit. I'm not quite sure yet. There's a nice little silver bullet entry right at 12. There's 10, 11, 12 inside the fair value gap. There's your silver bullet entry for first, second scale out. Third scale out is up there. And you would have been a couple of pipettes above it, so you would have had 3 scale outs already. This is the one we were calling earlier for the 50%. This was my pre-market analysis this morning. I was looking for the 50% of that wick. So upside, have we got something in here we can trade with? If I'm expecting further upside. $11, $12. There's your silver bullet here. See, if you would have taken this as right at 1700, there's a silver bullet entry there. Oh, you don't take that? Well, here's the second one. You take that. You got maybe a piece off here, and then it trades back against you. Then it actually sets up. So this is kind of like the Judas swing of each candle. That's why you're going to be careful about those first setups. Michael doesn't talk about the 12-minute mark. This is just something, again, my own observation. But this could be usually is the Judas swing in that first hourly candle is the wick down. And you pull a lot of people in, especially when you start saying, go for your first fair value gap. I like to wait for that 12-minute. And yes, sometimes I miss them. But this to me seems a little more meat. You're catching the meat of the hourly candle versus the wick. Hoping that your hourly candle is some small little wick like this and you're going to hammer all the way down or hammer all the way back up again. You're going to catch that. Euro is long here. Now see, we're still inside that daily fair value gap. We just popped through it. Like observation wise, see how we're just kind of inside, you wick out. Yeah, I couldn't give you an honest reason, but yes, if you're looking at it from an hourly perspective, we've now broken above this fair value gap here on the hourly, and we've come back inside of it here. Let me draw this out so you can see it a little clear. So this is the rule we used just a minute ago when we took that little tiny, or when I took that little tiny loss. So now we're back into the midpoint of that inversion fair value gap. We're back to the order block. Inside the inversion creates a gap for us. So yeah, upside for euro. What do we see for a possibility here? It came back, found support at it. Now I want to see this. Now my rule is I don't have a body break above this with a fair value gap. I like to see a swing high. Let me give you an example. Here's a little fair value gap that occurs above the swing. So anytime something gets more strength for me when there's a fair value gap that occurs above a swing. So above a swing gives us some support. Here's another swing. Fair value gap occurs just above it. This one actually includes it. We come back into it, and off we go. If you don't, it tends to lag. It's just an observation I made. It just tends to lag a bit. So here's, if I want this to break to the upside again and I want it to really start to move, I want to see a fair value get above here. And there's nothing. See how it kind of just loses its luster? Now if it comes back into here, you want this to be the breakaway gap. If this is really going to support price, you want to see this remain open. You can come back and fill this first one here. But if we start to chew into this, and you can come all the way back to the top of it. Once again, we're coming back and we're re-tagging that inversion fair value gap. So now do we get some big legs and start really leaving here? But good call on your side, by the way. Yeah, I want some bold strength there. Here's an example. Break in market structure with a fair value gap. Curves below it. You come back inside it. Run for your lows. Quick snipes for sure. And there's not very many pips there when you're looking at euro. That's 3 pips, 7 pips. It's not a lot of pips to put your money at risk. Now, if this was S&P 500, where you're moving big volumes, then yeah, that's a better return on your money. You have to put some huge leverage on that to try and get 7 pips out of it. See how it's kind of just, I don't have my fair value gap above. To me, that's just, it's giving me, it tells me that is really looking for a direction to go in the short term. It has an objective. If it doesn't have a fair value gap that breaks that, this is what I tend to observe. It's this lackluster kind of thing. Now, whether or not that's true or it's a Michaelism, I'm not sure. It's definitely not. Michael's never mentioned anything about that. It's just something I'm, after all these years, I kind of just start to see this stuff. And you know, he's got 81 entries, and he's only told us like 20 something. So maybe I'm stumbling across other ones. I don't know. But if you got time, give that a test, Kevin, and see if you like the idea. See if it sits well for you. If not, just stick with the setup you've always been going. That's made you money. It's got you. Yeah, see this. It loses its strength for me when it starts doing this. Yeah, that's what's got you your account right now. So stick with what you know. Stick with what's best. Stick with what's made you profitable. And if that's your bread and butter setup, don't get tempted with, don't tempt your tummy with all the nuts and honey that are out there, right? There's plenty of other setups, but if that's your go-to one, your meat and potatoes one, it's what's right on the table, stick with it. Otherwise, you start to play with these other setups that may not be as foolproof as the one that works for you. Michaelism. Yeah. That'll be a new word. Michaelism. ICT slang. We talk a financial language. We talk Michaelism. Like you get really fancy and say, Mikeism. It's a Mikeism. You must understand Mikeism. So now we've got a fair value gap here. We go up to here. We're between these two right now. We're between that order block, and we're inside this fair value gap, inside this inversion fair value gap, blah, blah, blah. And we're obviously inside the fair value gap on the daily. So you see how you could get beat up in here, and even to snipe this right now in a euro is less than enjoyable for me. And see how we came up, we just tagged the bottom of it right there, which is what I was trying to point out earlier. You tag the bottom of it there on the hourly, and we're done. We start to move back away. So that's now given delivery on the buy side. Up to there, the wick. We've closed that gap in. Price has been delivered. Again, it's just a wick from there to there. So it is a price imbalance still. But we have closed in that liquidity void now. Yeah, it is a lackluster run today. What is oil up to? Yeah, I want to see get on top of here. You can start pushing through here now. So you're back to the consolidation. Big bold candle above. Create a fair value gap. Come in, leave the fair value gap open. Get support on this weekly. And start pushing for higher prices. We have a total liquidity void here. Now we're getting a reaction off of this weekly and back into this consolidation again, and we just ran out the rejection block. This wick, look for halfway in this wick. Gold. Okay, gold, we're expecting gold to go up due to the wall. Never mentions of all. Okay, so we've got weekly imbalance, or weekly new week opening gaps overlapping. Nothing. There's nothing here. Are we just running up to the rejection blocks here? Into the wicks? Are we going to clean this out, turn around and come back into the liquidity void? It's a sit and watch Monday day. There's not a heck of a lot here to really sink your teeth into. Look at that. We're inside this guy again. There's your breaker, threshold. Everything's respecting the threshold breaker there. And it's coming down into the lowest down close body. This is your mitigation. Oh no, that would be a breaker. Mitigation block. It did not break an old high. So we're coming back off of mitigation and breaker. You're stuck between these two here now. Inside this range. Waffle, waffle. How do you like your waffles in the morning, my friend? Now you gotta wait for a PD array for a breakout. Set a new PD array outside of this range. Expansion. Downside or upside, give us something. We're getting that. Still inside the daily. It's kind of a good thing I didn't put the bot out today. This would have been a sell, sell, sell. That would have taken it out there. This would have, those would have been closed out. Those never would have got in except for that guy there. And he would have scaled out there. And there. Would have got 20% off there. Before it came back and took us out. It would have taken this one here. All of those would have been in. All 4 trades would be in. You'd be one. Yeah. It would have been profitable from 7 o'clock if I turned it on. Would have taken a loss. I know it would have taken a full loss, and we would have had 10. 10%, 20%, full loss, then a full 1%, 10%, 20%. So we're looking at a run below these lows. I'm just trying to find all the places that, had I turned the bot on, it would have made or lost money. It would have taken a full 1% loss there. But because we dialed it down, because Kevin, you had me thinking, making sure I double check that, so it would have been a 0.4 of a lot. So it would have been less than half. Would have taken a full loss there. Then this would be a full 0.4% loaded on. 0.4% loaded on. So you have 0.8%. Stops would be here. Now, to me, you shouldn't break this again. Once you came back to there, you've hit that, you want to see it leave. If it came back to here, I'd close that all out. You shouldn't be revisiting that. You've already come into it, and you've left it. There's no reason to come all the way back up to the top of that again. Close out everything. I can't call it today. I can call these little ones, but there's nothing beefy to get on, so and look at the old Canadian dollar here. Finally getting some strength. We have a break in structure. Nothing significant. You want to see it get below here with a break in structure right here. Boom. That's a nice solid one. Fair value gap. As soon as it comes back inside, tag it. Tag it, tag it. Get all 3 of those. Fair stop loss goes up here. Running for 1, 2, a fill right here, which would have been right there. And then the next one is right here. Stop loss would be all moved to break even and just a little bit beyond right now. And that would be a zero stress trade right now. But we didn't see that one. Hourly. Fill that gap. Weekly is done. It's not, that's just a price imbalance really. Started up here, the gap came down, hit the top of the high on Friday. The liquidity void was filled and then left. Come back inside the void again. Now, are we leaving? I've got nothing here of any major support. Got some inversion, fair value gaps you want to see it get on top of to get some support to continue running to the upside. Yeah, definitely a slow day. Do you see anything out there, Kevin? Do you see anything worth having a look at? I can't really see a hell of a lot here. It's pancakes and waffles today, man. Pancakes and waffles. Yeah, see how it reacted off of that. Comes back up, balances price. What did we say that was looking for? Why is my little box higher than that? What's going on back there? Ah. But they went to here. I bet you that's where they went to. Right there. This is where the gap occurred, though, between the open and the close. There's the close, and that is actually the gap, the liquidity void that occurs. So there technically is still more of it to go above. Choppity chop, look at that. So here's an example. Market structure. We didn't break it. We did break it here. Fair value gap. Come back down. We still didn't get inside the fair value gap there. There's actually a wick underneath there. You probably can't see it, but it comes all the way down to here. So the fair value gap occurs above. As soon as it comes back in there, you get in there. This one you can't. So you look for a break in structure to the upside. Look for the next fair value gap entry right here. Then you get inside that one. So you can load up on that. Stop loss goes below the next low, or the typical rule is it goes below the candle that makes the wick. But unless that's a swing point, not a smart place to put it below the next swing point. So you're down here. And then you would have caught that long. You would have been mashed around a little bit. But that's the general rule. I want to see a fair value gap get above a break, then trade inside that gap, you know, the high, the middle, the low, whatever you want. And then your stop loss goes below the most recent swing. When you're getting little tiny 1 minute jobbies like that. Break in structure, fair value gap. You can trade that. Breaker inside of fair value gap. Trade back to the breaker. Imbalance. Just look at that imbalance. Little tiny piece of imbalance right here. Look at this wick. Right inside that imbalance. Huge retracement back into the breaker. Breakers are so good for providing support. Breakers inside fair value gaps. That's your load up the boat. Take a mortgage out on the house. No, you don't take a mortgage out on that. That's the big solid trade though. When you get a breaker inside of a fair value gap, when there's a break in market structure to the downside, that one's when you can usually load the boat on and get short. That's another entry. I try to limit my pairings so I don't see something that isn't there because I'm looking and jumping around it so much. So just, yes, good. Stick to that rule. I'm jumping around all over the place trying to give some entertainment for people who are watching this, which could inevitably be my downfall if I keep jumping around. I should probably just stick to a couple. What is liquidity grab? Was that a liquidity grab? And now we go higher towards the 10 a.m. candle spike. And that's in euro. This liquidity grab here, you mean? And start running for higher prices? Well, again, now we're inside this inversion gap. We're inside the fair value gap on the daily. We have a inversion fair value gap on that side. We're staying inside that right now. We're staying inside this one right now. We haven't got a body above it. And we're here. So you're between here and here. So I can't give you an honest run on that for 5 minute. Order block inside the inversion gap. Fill the fair value gap here on the 5 minute. You see all these wicks? Nothing solid. This is just high resistance. Yeah, it just looks like high resistance liquidity. Yeah, I'm not touching any of this today. This is certainly not clean at all. I suppose if you really did some digging, you could find, if you had to make $5 today, I'm sure you could dig one out of here, but I'm not. I want some laughable, solid setups. Here's another entry. This becomes a breaker. Last up close candle before a run below the old lows. Okay, before this swing here and that swing and that swing, breaker. Draw that breaker out. As soon as we get a big bold candle through it like that, look for that breaker to support price now. So when price comes back down, see how it supports price in here? Has a little fair value gap, pops into it, leaves it open, breakaway gap, measuring gap, up we go. Inside the weeklies. What's the potential for price leg? This is a painful way to get your price leg finished. We're way too much into this inversion gap already. We didn't bounce off of it and leave. We bounced, kind of lost strength inside that daily fair value gap high, and now we're pulling back into the middle of the daily fair value gap. So if you're pulling in here, I'm just looking to run. Where are we in the range that was created this morning? We're coming back to 50%, which is inside the inversion. So 62% gives us a full fill of that fair value gap if you're looking at from the 5 minute BISI. 79% gives us this one. So we can come into here, hit this, and then start pushing up for higher prices. And then this might be the new price leg higher. So if we put this one here, that would take us above the new week opening gap. So let's see what happens here. I want to see it react off that line there, which is also the inversion fair value gap here. We're digging into that one a bit. Fill this. We just pop below that now. That may be all we need is a little pipette or two below that, and that still remains open. But I'd like to see it fill and start going. But that's all you need. A little tippy tap below. The low on that one is 374, and the low on this one is 373. One pipette. Now I can see there is a slight delay in the what you see on YouTube and what it's actually going on here. So for you, Kevin, when you're looking at this right now and you're watching this live, are you seeing on your charts how big a delay is it on between what you see on YouTube and your charts? Five to 8 second, really? Really, that's okay. So hopefully we can call that 5 to 8 seconds before it hits these areas so that you know where we're looking at. So but there, even though there's a delay there, at least you can see that on yours. If we're calling this area within 5 to 8 seconds. Yeah, I wouldn't imagine you'd be able to trade. There's a lot of delays in between there and market release. So it's good to have your charts available, watching it more live stream, right? So that was all it needed, was that one pipette to pop below. This nice reaction off of that. So what you want to see. And that right there, you'll probably find is 50% from that low to that high is 2.2. So let's go to 11, see if that is the same. Look at that. Right on the money. So that right there just hit 50% of that fair value gap. So we bounced off the middle of it. You're not taking any trades here, though, are you? It's really none of my business whether you're taking a trade or not, but if you are, be careful. This is a really choppy market today. There's nothing for me to jump on here at all. No, not till tomorrow with the account. Good. Yeah, no, this is just a lackluster day, which is okay. It's Monday's kind of giving us a little idea of how the markets are reacting to this crisis in Israel, this war. Let's go over here and see what Michael says about everything. Where's he up to today? He says, oh, he's on the NASDAQ. He's over here. Oh, he took some trades today. Oh, wow. He took some killer trades today. 2 sell sides. Holy cow, 5, 10, 12. He'd put 12. Oh, he's on the 15-second chart. Wow. He did 12 handles, or 12 lots he put on, and cleaned up 60 handles with 12 lots. Sheesh kabibble. That's amazing. Good for him. Yeah, if you can see it, I don't know if you have anything on his X account or his Twitter account. I've been really good with only doing the silver bullet trades, getting in and out, and when unsure, just sit and watch, looking for the refund and future profits. No need to rush for me. Yeah, totally agree. It's like there are a ton of setups that happen all the time. Yeah, if you follow him, just look at his Twitter or his X account today. He did some killer trades today. He was doing he was catching these highs. He caught one like right at the top at 12 something. Yeah, I think he caught this high right here, like right on the money, and then got more in here and wrote it down in here somewhere, or to the top of this fair value gap here. Yeah, he cleaned house on that one. That's 12 o'clock. That's early. That's like London. I wasn't awake there. Yeah. Break-in structure. Body. Return to inversion. Get short. Break in structure. Fair value gap. Return to get short. Return to midpoint. Get short. Yeah, you would have been sitting on a couple of drawdowns for sure. But aiming for 1, 2, 3. Right back to the breaker. Hit it. Quit it. Nice. Again. Yeah, I can see them. I can see them after the fact. But like you, I've got to stick to my I've got to stick to the ones I like. I should just stick to this S&P and NASDAQ. Those two trade some nice volume there. I've only ever made one tweet. I comment every once in a while on people's stuff there. Yeah, I just post my own stuff on my own thing. I've got 2 followers. I post stuff. Sometimes I'll post stuff that's off of here, if I've had a good day here. And I will post on the Telegram. Michael has his own private for charter members only Telegram. Did you do have you just been doing, Michael, what you see on Twitter with Michael this year, or have you actually taken the full mentorship, like the full 1-year mentorship? Because if you have the Twitter, if you have, what's your handle, username, I'll follow. It's just Darren Hancock V or ThetaWaveTrader. I think I moved it to ThetaWaveTrader. I played with some of the names on there. Yeah, it might be on there. Might be. I think it's ThetaWave. That's how much I really post. When I post something on, yeah, it's Darren Hancock at ThetaWaveTrader on the YouTube. Just Darren Hancock at ThetaWaveTrader, all one word. Okay. Once I've learned the silver bullet, I watched it a few times over and just started sticking to that. Oh, you are an example of somebody who, if you're disciplined enough to just follow what Michael has taught you of a silver bullet entry, and you know nothing else about what's going on with his concepts, and you can make you'll be a poster child for the following the rules. If you can just make your living off of just doing what he showed you there without having any other understanding about, now I don't know what you could be a whole hobbyist in the market for all I know, but if you were just taking somebody who's just raw and just learned that one setup from Michael and followed that as his bread and butter setup all the time, and you were brave enough to start up your own account, make money at it, you would be the poster guy for discipline. Follow that bread and butter setup. Don't go running down the road. Don't do all that other stuff. Don't get suckered into all that crap that everybody else gets suckered into. You would literally be the poster guy for that. He says he teaches so many models that to me, it's not needed. Find one that works for you, for your lifestyle, and that's it. You're an AI, aren't you? I've been talking to an AI this whole time. That requires some hell of a discipline. You could tell you're in the right job for your discipline. I'm picking things up here and there with the other videos and picking your brain each morning. Well, thank you. Hopefully I'm not confusing you too much. Yeah, this is like talking to an AI, man. This is good. If you can stick with this binary approach of yours, oh man, I will sing your praises to everybody. I will say this can be done. This can be done. I know a guy down in New Jersey by the name of Kevin. Kevin, I don't know if he's an AI or not, but he comes to this stuff right out of the box. He's like a blade of grass popped up as green as he can be, and he has found his entry, and he knows I'm institutionalized. And he is just sticking with a setup trade, and he is making his living doing it, and did not require years of Michael. He just required one setup that spoke to him, and he is making a living off of that one setup, and that's all he's disciplined to play with. He's not looking for anything else. He's not looking to load up the pocketbook and the treasure chest with every conceivable piece of Michael information. He is taking it and found his one little entry and working that. And sometimes ignorance is bliss, and I do mean that in a totally respectful way when I say ignorance. When you don't know all that other stuff, all you know is that one thing, that's all you look for, and it makes you money, who cares? Who's happy? It's bliss. It truly is bliss, because you're not lost in you're not martyred down in all this other crap. You're not carrying the weight of looking at all these other options and trying to play all those options. You just look for your setup, man. Good for you. Michael even says in his videos and podcasts that he's done. Learn one model, learn that and go with it. No need to learn 80 different models. So true. So true. I've got a ton of different models, and I waffle on them until I see something I go, ooh, that's a really good one. But the one I like the best, I'm an inversion. I'm coming out of the closet here and telling you I'm an inversion guy. I'm an inversion fair value gap guy. There, I said it. I made it public. I'm just looking for one thing, 3-4 pairings, and that's that. Good for you. That's perfect. Yeah, I'm an inversion fair value gap guy. I love looking for these inversion gaps and these little moments where I find support at them. I get in on those, and I look for breaks in market structure with that particular setup. And my bot, I look for the silver bullet. My bot works awesome in silver bullet days. If you catch the silver bullet 12-minute run with my bot, one day I'm going to put that on. When I feel brave enough, I'm going to put my bot on and trust that it knows what it's doing. I'm going to load it on at 12 minutes past the hour, and I'm going to say, pick a direction. It's going to find the one it likes, and it's going to run, and I'm going to let it run continuously. I'm not going to shut it down after it's paired in a couple of times. I'm just going to let it go for the full hour. Set my objective up high and let it run for the full hour. It'll go in and find every fair value gap on the way up and pair in. It just keep dropping in trades all the way up. And all I'll be doing is just feed the wolf, feed the wolf. I'll just keep hitting that button over and over and over again, feeding the wolf every time I break an old high. So that's the capability of that bot. It can, once I unleash the beast, there's so much more that thing can do. I've programmed so much stuff into that. I've got to allow it to stretch its legs, get fat out there feasting. Looks like it's going for a little jog. Set up a demo account and let it run tomorrow. Yeah, this is the demo account here. You'll see that the price here goes up and down and up and down. Sometimes I'll throw the bot on in the middle of the night. If I can't be there to watch it, sometimes it picks the wrong direction or gets caught on, like if I start it right at 10 o'clock, it looks for the first fair value gap and stays with that. So if I get suckered in on the wrong side of it at 10 o'clock, I have to start setting it up at 12 minutes after, I think. And then say, look for something there. And the first one it takes, let it run. But then it's knowing where do you turn it off. It's not a fully autonomous bot yet. I could make it autonomous, but it won't guarantee you success. And we want something it's really solid when you're watching it. But when you're not, you better if you're in a trending environment, be beautiful. And you can set it up on any time frame you want. So it might be better. I've never really tried it on these higher time frames. I've always played with on the 1 minute just because I like to compound my money. Doesn't look like anybody's turning up to the breakfast club this morning. I'm going to hang up. Nobody turned up. That's all right. Well, this is a good holiday. Look at that. Break-in structure. Fair value gap. Come back up inside the fair value gap. Breakaway. Break-in market structure. Fair value gap. Below break-in market structure. Come back up inside it. Tag, tag, tag. Stop loss is going up here. Boom, you're finally getting through it now. Bit noisy, but finally getting through it. Fair value gap, but it's above the swing point. So you gotta rely on this guy. So that would be the kind of rule I was talking about this morning. You get this guy. This guy. And that guy. Stop loss goes up there. So there's your first one. Look at that. Perfect fill. Pull off now. Little tiny fair value gap right here. We got through it. We have a body getting through it, but looking for the objective we're looking for to get into short. So be careful here. I want to see that just give way and go straight through it. If it comes back like it's just done now and found support at it, there's less likelihood. Here's the other fair value gap. So now that we've filled it, I don't want to see it go through it again. So you can almost eliminate these ones now as stop loss is still there. You're still in that one. Now for me, just because I don't want to see that thing get re-hit. So my visual stop loss would go right there. We've come into the breaker. Yeah, tomorrow I'm just gonna try. I'll find. Maybe I'll open up another demo account and just throw it on there, and Let it run. Let it buck. See what happens. Yeah, I'd close that out now. Right there. If it hits it again, you're out. And it's gonna. They're not going to leave that untouched. So close out here, right on break even. I don't even trust that anymore. Don't even trust my adhere anymore, even though they're just wicks inside there. The fact that we're through this guy already. The rule is a body breaks it, you get out. And if you're between there and there, well, you're stuck in your reason to get out and a reason to get in. So if you got a reason to get out and a reason to get in, get out. You want only solid reasons to go along. So we have a structure break here, but the fair value gap is below the break. So you have to rely on all the way back down into here. Ran those out. Threshold is done. Actually, these guys are all inside this guy here. That's the highest body one, so you'd look for the midpoint of that one. This is good. It's challenging. It's trying to make sense of this choppy kind of environment. PD ray to PD ray. So we got this guy right here. So we're inside that guy there. The bodies are respecting the inside of that guy there. A nice big candle shoot up here. Big candle, gap, come back down, get long. Start aiming for this stuff up here. Let's see a break above these highs here. I got about another 10 more minutes left in me. I don't see anything super exciting here this morning. I might come back this afternoon to do the 2 o'clock run because I'm starting to see there's some interesting stuff in the afternoon. So maybe if the morning settles down a bit in the afternoon, we might be able to get something off of the 2 o'clock. Lunchtime, run up into the 2 o'clock high or 2 o'clock low. Might have a little poke around in there and see what I can see. I just want to see if this kind of manifests itself right now. What we just called for is just a big run up here. Fair value gap. Break in structure. Get in there. Start running up. It's the 18 reversal. The reversal candles on the 18, so there's a 17, there's the 18. Yeah, I'm getting sleepy as well. I've only traded 1 p.m. silver bullet so far. Almost had to hold over the next day. You caught a nice London. Yeah, especially if you're as new as you are in this, holding it over from one trading session to the next, you got to really know what your objectives are going to be, or you have to keep your stop loss trailed, or make sure you manage that quite well, especially if you're walking away from it and you got money on the on the line here. Yeah, when you're first starting out, you want to keep an eye on your trades and just watch. What you're doing right now is you're really getting a feel for how the market trades. You can't beat watching it live, watching all this bouncing around and looking for where it connects, where it starts to move from, what your expectations are. This is the best way, even though it can be super boring at times. It's an opportunity to really get to read the market well. Yeah, prop firm account, it was super stressful. Yeah, because you got your own money on the line there, right? With a prop firm. I don't know how much it costs you to get into that prop firm. 100,000, I would imagine it's more than $50. Mine was $50 to get in. Canadian. For Americans, it's 30 some odd dollars, $39, I think it is, to get a $5,000 account. And then try to trade it up from there once you get into your first 10%. And it starts to move, then they start to pay you. Once you get over, obviously, is once you've been qualified. $500. Yeah, I could see why that'd be a bit stressful. That's some overtime hours right there. And you get that $500 back when you hit the next 10% up. Is that it? Like, did they return that money to you? Your $500. Okay, good. So now we've got this thing here. We have a break above market structure. I want to see this bull candle I was looking for here. What's happening here? So you want to see this stay open now. There we go. So I want to see that kind of create a fair value gap here. The next candle opens up, comes back into it, and then they're going to start targeting these areas here. %, then 5%, then 14 days after your first trade, the live account, you get the refund. So you have to go 8% up, then you have to go another 5%, then 14 days after your first trade in your live account. Okay, so you've done your 8%, you've done your 5%, now you got to wait 14 days after whatever trade you make. You get that as they finally give you your money back. Is that how I'm reading that correctly? So you have to get that to 108, 100, then 5 more, so you're looking at $113,000, and then 14 days after your first trade. So I assume tomorrow I'll get the account, and I think it's just 14 days, not trading days. So I assume around the 24th I'd get the refund. Ah, okay. Good. So you've managed to creep that account up 13 grand. So how do you manage your leverage? Do you just take 1% of your account for each trade? $108, and then you they reset your account with a new login, and you trade on it to 105. Okay, then live account is what I have now. Okay. So yeah, do you risk 1% of your account, or are you a 2%er, for your trades when you put them on? Like, so you haven't done a lot of trades then to get your account to that point? Yeah, basically doing 10 lots per risk, $1,000, and aim for $2,000 profit. But I usually cut at around 600 to 800 to secure and move on to the next day so I can sleep. Yeah, that's a lot of lots. That was the entry I missed 2 minutes ago. Coming back to the fair value gap open. So that's exactly what we called for here. I wanted that one to do this. It didn't, so we wait for it. It broke above market structure with a fair value gap. We return into it right there. Bang. Now you get long. Stop loss goes down here. It's okay. These things happen all the time. So this is a nice little interesting paper trade. If it first scale out's there. $10 lots is a lot, but only silver bullets, and I wait for the right entry, so not in drawdown much. Yes, smart. I like the way you think, man. I like it. Sometimes all you're waiting for is this really kind of cool entry setup. So when you can call this setup before it happens, and then it happens, then and it's your setup. That's your entry. Trust that you're gonna take it. I didn't, because I was too busy talking. And that was the entry we're looking for. We called this fair value gap. As soon as it comes back to the top of it, you want to get going. With a live account, I'll do less. So here right now is 22, 23 handles already. Scale out, move to break even, zero stress trade. That's my bread and butter setup right there. Next objective is here, then here. So you take out a portion right there at that order block, because I could just turn around and come back down on you, because we're looking at this whole range here now, looking at 75% retracement. So I'd take out a portion there. I'd move my stop loss into profit, so that pays for the cost of my trade. So took 10% out here, 20% out there. Now wait and see what happens. So upside objective after this whole day, we had one trade that was a decent trade. This is what Michael was saying. Sometimes I watch Michael's stuff, and I'm a little behind in some of his videos. And when I finally watch a video, it's like he's speaking to the very issue that I'm looking at addressing. It's so neat. It's like when you're ready to hear it, you'll hear it. And I play his video and I go, oh, that's exactly what I wanted to hear. And it's like he's talking exactly about the issue that's on my mind. Right there in that video, I'm like, wow, that divine intervention? I don't know. But this is a nice little, beautiful little run up. here, we're going to get this objective. Look for this one there. Look for that to support price and continue up for these equal highs here. We want this order block to support price now. 2 fair value gaps. I want to see it get into here. I don't want it to get any lower than this point right here. So now this fair value gap, or this sucker here, I'd move it up to here. So now the profitability, that's where you're profitable. So we've got 80% of our trade still left on. We're going to take another 10% off up there, so that'll be 70% left on once we get above this high here. And we're already in profit. Paperly. 14 handles with the remaining 80% of our trade. It's guaranteed 14 handles. So we've come back to the order block. See, tagging it right there. We have a body next. Threshold. I don't like it going through 3 in one time. Like I say, we're allowed to come back to here. I guess it could fill the first one. I'd want to see that. This would be the breakaway gap now. This is when the bot would just be like destroying it right now. It'd be going in here, it'd be going in here, it'd be going in there, there, there. That'd be like 1, 2, 3, 4, 5% of the account would be going with the bot, and you're already breaking even on a majority of these. So these will all be stress-free trades. So you still only have about 2 or 3% of your account still on. And as soon as it breaks this high here, they're all moving to break even, so nothing would be at stress. The bot would instantly put them all break even the moment it breaks that high. Now as soon as that broke here, I would take another 10% off there before it got to that. Just because the rule is anytime there's a swing high, I take some out. Order block, wick through. Bodies are respecting the open. This would be 35 handles once we reach that. That's my target here, yeah. Well, which is really I'm just targeting this fair value gap. Just to tag the edge of it. That would be a scale out point. But I want to get right here above this. I know that it's pretty close. I'm just going to reach for that. Trust that it reaches for that. It's one of the things that I needed to hear the other day. Michael says, just trust it, man. If you know it's going to go, put your trade on and walk away. Put your stop loss in. If it takes it out, it takes it out. Just trust that it's going to go there, and then you'll haul these huge runs. So I have to trust that what I'm looking at meets my rule. Just trust it's going to go. So it broke that high there. $10 a.m. bear wick. 10 a.m. bear wick. This guy right here. That one you're talking about? Yeah, so my next objective is here, then here, then here, then here. So that'll be like, we got 20 off right now, so that'll be 30%, 40%, 50%, 60, 70%. Well, the trade will be off by then, and all this will be moved up higher and higher. So whatever I've got left is now, I'm scaling it out as I go up, and I like to scale out at PD arrays. I know Michael likes to hit these highs. My confidence is still not that high that I can trust that. That's why I say, when I listened to his video the other day, it was like he was telling me, look, just trust your calls. You know, if I can read the market like I can, then there you go. There's that objective there. So that would be 30% off. And I would take this now, move it here, even though it could come down quite easily and hit this now before running back up there. So now I've got 30% out, so I've got 70% of the trade on, and 70% of my trade is guaranteed to make 21 handles. Does that make sense? So this is how I'm kind of managing a sniping. Now some people might say, no, you're scaling way too fast, and when is taking money scaling too fast? Or maybe I'm just a little punch drunk, and I'm a little I've lost a lot of money back in the beginning stages of this, and I want to make sure I'm protecting my money. So a little paranoia pays off. It does here. So if that comes back against me, I'll be like, okay, my day's done. I've hauled out 30% up to there, and I've hauled out 70% up to here. And Michael was talking about 5 handles to get you started. Well, I'm not starting this, but that's 21. Guaranteed 21 handles for 70% of it. We've already hauled out 30%. There's 10% already gone to 35. And there's no more stress. I don't know about anybody who wants to trade zero stress. But if you can trade zero stress, that's where you want to get. Zero stress. That's our zero stress trade right now. Now, do you scale out on a bear candle or scale out after each target is hit? I scale out after each target. So I scale out at the specific PD arrays that I like. So that's the PD array there. You scale out a portion. We're in a premium range, so you could, and we're getting closer to the lunch hour. So now you want to think it could go into this little consolidation. It tends to come back and take out. So my guess is it's going to come back into the zone anyway for lunch hour. So the fact that we popped into that fair value gap there, and then we're waffling here, I would just go, feed the wolf, feed the wolf. I'd hit that button a couple more times, take out 24%. So I'd have 50% of my trade would be off in here, and the rest is sitting right there. Just because I take into consideration the time, the 18 candle, which is the reversal candle, usually. We're in a premium of the last 17 candle. We're in a premium with a little fair value gap up there. So time to start unloading some of the positions. So I'm all right with that. I would be quite content with this 5 handles. That would be thousands of dollars again, right there, just in this little run up. Does that make sense? So there's a bunch of things you have to kind of keep in mind. Again, now you gotta start stacking more knowledge from Michael. Otherwise, you just go, where's my entry? Where's my silver bullet? I want to take whatever specific profit is, and you take it. I don't care if it runs up. If that's all you need to know about Michael's stuff, then that's all you need to know. What you're going to be learning from me is a lot more fluff and a lot more popping around all over the place, looking at multiple different things. Because of my ADHD, I think about 10 things at one time, and they happen way faster than my mouth can produce coherent conversation sometimes. So you have to forgive me for that. But I'll see a logic behind it. Like when we called this, I see my setup and I go, this is my setup. I want these next candles to set me up. So when I was calling it here and said I want to see a bold candle get above and a fair value gap, okay, well, I didn't get to see it until 3 minutes later. Then it made it. Then it created the perfect entry, which is right there on that guy. That's E1 entry, or entry 1, E2, and E3. So those are your entries there. And because you want that to stay open, you take the very first one, add off, and you run from there. So stop losses are here. 50% of the trade is off already. So with a live account, want to scale out. You want to scale out. Oh yeah, absolutely you want to scale out. With your live, let's see, it would have taken me out right there. So that's good. I'm done. My day would have been done right there. 50% I got off up here. 50% comes to here. So 100% of my trade I made 21 handles or more. Not a lot. But I bet you that was a couple of $1,000 right there. And I don't know how many people need to go to work for, how long you have to work for to make a couple of grand that we just made in, what was that? If we entered in there, it'd be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 minutes. You get paid like a lawyer right there. A couple of grand in 19 minutes. I don't know if lawyers even make that much. That's all you need. 19 minutes, you make a couple of grand. Go to the sidelines now. Don't care what else happens. And that's in a shitty day. That's in a day that did not produce. Mind you, it did here. This was a nice one here. This was a nice one here. So it did have the sales. I was too busy jumping around. I think tomorrow I'm going to try and stay more germane to what my markets. I like 500 and tech. So I'm going to stick there with those tomorrow. If you need me to pop over to pound and euro, let me know, and I'll help you out with your entries in on euro and pound tomorrow. Maybe we'll throw the bar down euro pound, and then I can kind of just trade my other one here, the tech and 500 S&P. But with that, my friend, tomorrow, feed the wolf, filet mignon, and side of salmon. Yes, indeed. Yes, indeed. Feed the wolf. All right, buddy. I'm out of here. This will be the end of my day. Sounds good. Yeah. Sounds good. I will do my best to make sure we make some cash tomorrow. That's it for me. Thanks for tuning into the Breakfast Club. Just you and me again, my friend. That's all there is. People are missing out on some golden opportunities to make some coinage. But hey, that's okay. It's hot. Eventually the word gets out there and people hear about it. This is kind of more of a journal entry thing for me anyway. And it's fun having you along. I appreciate it. Have a good day, and I'll see you tomorrow. Thanks for popping in on the Breakfast Club today. My name's Darren Hancock. We're out of here today. Thanks again. Pay it forward, folks. If you're out there and you're making some money, help the less fortunate people out there in the world. Pay it forward. Stem the flow of hate. What's going on in Israel, and right now it's just an absolute crying shame that it's going on. So love your fellow man. That's all we got. We're all in this world together. I wish you all the best, and we'll see you again tomorrow. Take care.